We have had a wild couple of days, both here in Florida on the glorious Space Coast, as well as in the global financial markets. First, we had Hurricane Debbie drag across the state, and then, as the wind and the rain was busy erasing the sand from our beaches, the stock market started dumping, taking Bitcoin along with it. This, of course, leads us to the obvious question: did you buy the friggin' dip? This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, morgen, and welcome to the Bitcoin Bulletin Podcast, now in our fourth year. Today is Wednesday, August 7th, 2024, and as always, there is a lot to talk about today. But of course, before we do, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 855,838, and Bitcoin is ringing in at a US dollar value of $54,920. And that means you will receive 1,821 sats for every filthy US dollar that you convert into Bitcoin. For those of you paying attention to such things, the recent decrease in Bitcoin's US dollar value has lowered Bitcoin's market cap, but we are still above the all-important $1 trillion mark, coming in at $1.08 trillion. That's kind of a big deal because, I've spoken numerous times about human nature and magic numbers and the psychology of numbers and the psychology of how that comes into play when people are perceiving financial markets, etc., perceiving anything really. But, when the normies look at Bitcoin and they see it as a $1 trillion asset, that's a huge psychological difference between looking at something that's worth maybe $990 billion, or $1 trillion. $1 trillion is just a truly staggering number. And currently Bitcoin is hanging in there, still above 1 trillion at $1.08 trillion. For those of you who value your wealth in gold, 1 Bitcoin will currently purchase you 23.1 ounces of gold. That's a really fucked up way to look at that statistic. For those of you who pay attention to such things, it will cost you 23.1 ounces of gold to purchase just 1 Bitcoin. Obviously, that's down just a tiny bit from the last couple weeks because the price of Bitcoin is down. And while the price of gold is down this afternoon as well, it is still up there near its all-time highs when priced in US dollar terms. That, of course, is because gold isn't getting more valuable, but the US dollar is getting less valuable. And so just like everything else is getting more expensive, gold is getting more expensive in US dollar terms, even though it is trending to zero in Bitcoin terms. For those of you who value wealth in pizza, 1 Bitcoin will currently purchase you 3,071 large pepperoni pizzas from Papa John's, a heck of a lot more pizza than Laszlo got on that first Bitcoin pizza day back in 2010, where he purchased 2 large Papa John's pizzas for a whopping 10,000 Bitcoin. A staggering sum, but something that we continue to thank Laszlo for because, as he even mentioned, that, who knows where Bitcoin would be if he hadn't made that purchase. So not something to dwell on as a negative, but something to look at and realize just how far we've come in the 14 years since Laszlo made that purchase. That metric that has been my favorite for most of the history of this podcast, Bitcoin's 24-hour average transaction rate. Well, that's down significantly from last week. Last week, we were averaging 6.75 transactions per second. And right now that's down to 4.91 transactions per second. And while this isn't any official kind of TA, any official kind of transaction analysis, once again, Bitcoin's 24-hour transaction rate is down and the price is trending down. That is just a casual observation. As they say, correlation does not necessarily equal causation, or in this case, vice versa. Causation and correlation are not necessarily correlated. I am having a hard time gathering my thoughts today. I'm awful excited to be here. I think this is going to be a great episode, despite the fact that there's so much going on in the financial markets that has normies and Bitcoiners alike in, fit to be tied in fits and knots, stressing over the fiat value of their stack of Satoshis. Although not all of you, there are those of you out there that are just salivating, chomping at the bit, just drooling over how many Satoshis you're able to stack right now. But even those of us that have been around for more than one cycle, it's human nature. You're watching the prices, even if you're not watching it minute by minute, even if you're pretty good at zooming out, you still pay attention. And the human nature is fickle. It's a funny thing, the way the human mind works, because the US dollar or the euro or the peso is currently the mainstream financial instrument that most people measure their value by, measure their net worth, measure how good they're doing compared to their neighbors or how well they're doing personally. While that's the case, it can sting to see the US dollar value of your Bitcoin stack go down a bit, decrease a little bit, even though you're going to keep growing that stack, that you're going to be able to buy more Satoshis this Wednesday than you were last Wednesday as a result. And obviously, you and I both know that is where you should have your eye on the ball. That's the ultimate goal you should be aiming for, is how big that stack is going to be before no one's willing to sell you any more Satoshis. And that's a good thing. In this case, we're going to be able to stack significantly more sats than last week, as long as the price doesn't go through the roof while I'm hanyakking here. So where was I? Continuing on with the vital statistics and on-chain activity. And speaking of on-chain activity, the Bitcoin mempool, I guess depending where you look, it's absolutely chock full of transactions. Clark Moody's mempool, they've got almost 80,000 more transactions than they did last DCA Wednesday, despite the fact that on-chain activity is down at the moment. Mempool.space, on the other hand, is showing almost exactly the same number of transactions as last DCA Wednesday. And I know Clark Moody had increased the size of their mempool in the past, so maybe there's some mempool tweaks going on. Maybe that has more to do with Clark Moody's mempool tweaks than with on-chain activity. But either way, there are a heck of a lot of transactions out there pending in the mempool, although it seems to be pretty much in line where at least mempool.space is about the same as it's been the last 3 weeks in a row. And speaking of on-chain transactions, if you need to send an on-chain transaction, whether you're making a purchase or whether you're just moving your own Bitcoin around to different hardware wallets, improving your self-custody security, whatever that may be, if you do need to make that on-chain transaction, Clark Moody's fee estimator is saying that it's going to cost you approximately 5 sats per VByte to do so, if you want to guarantee that your high priority transaction is mined in the next block or two. Still a lot cheaper than last week, where they were recommending a fee of 3 sats per VByte. If you have up to a day to wait, just like last week, Clark Moody's fee estimator is saying that a fee of just 3 sats per VByte will be mined within a day. And he's estimating that a fee of just 2 sats per VByte will be mined if you have a few days to wait, maybe up to a week. Mempool.space usually tells a slightly different story. They're actually showing that it's going to be a little more expensive than last week for a high priority transaction, recommending a fee of 6 sats per VByte as opposed to 4 sats per VByte last week. That works out to about 46 cents in US dollar terms. And that's a little bit of a skewed statistic based on this snapshot in time, this particular moment in time, because looking at mempool.space, it's been 22 minutes since the last block came in. As a result, the fee estimator is recommending a slightly higher fee. If you do look at the last block, fees of just 3 sats per VByte were mined in the last block. So take that with a grain of salt. And obviously, if you are doing an on-chain transaction and you're going to lowball the miner fee, make sure you have the latest up-to-date information. Depending when you get around to listening to this podcast, it may be a little more expensive or a little cheaper to do so. Of course, make sure that if you're going to play those games, that you're familiar with what you're doing and that you're using a wallet that will allow you to bump that fee if your transaction doesn't get confirmed. But speaking of mempool.space, recently they debuted their transaction accelerator, which will let normies, even if you don't know how to use replace by fee, pick any transaction, even if it's not yours, out of the mempool and pay mempool.space a fee, and then they will bump that UTXO and make sure that it is mined in the very next block. So that's kind of cool. Something I actually meant to talk about the last 2 weeks and forgot both times because I got carried away with all the other stuff I was busy ranting and raving about. Back to the mempool.space fee estimator, they are saying that if you have a little while to wait for your transaction, a medium priority transaction should include a fee of 5 sats per VByte. And of course, a low and no priority transaction only needs to include a fee of 4 sats per VByte. But then again, as I mentioned, there were 3 sat per VByte fees. UTXOs mined just in the last block, even though that was 22 minutes ago, and estimates are going up now that, anytime blocks are coming in faster than 10 minutes, it looks like, the more transactions are getting mined, and so the fee pressure gets alleviated a little bit. And then when those transactions stretch out, like the other night, I saw a couple of blocks that both took over an hour to be mined, and then they started talking about 8, 10, 12 sats per vbyte fees. But if you just wait a block or two, things get back to normal. So between Clark Moody's fee estimator and mempool.space's fee estimator, 5 to 6 sats per vbyte it should be all you need to pay to guarantee that your on-chain transaction is mined relatively quickly. And speaking of mining, we are now less than a week away, or about a week away, from the next Bitcoin mining difficulty adjustment. As you know, the last difficulty adjustment, which was just before last DCA Wednesday, or just after 2 DCA Wednesdays ago, was a huge decrease, or a huge increase in mining difficulty. By the difficulty it took to mine the next Bitcoin block was increased by 10.5%, something that we hadn't seen in a long time. Certainly not the largest difficulty increase of all time, but the largest one we've seen in quite a while. Looking back through my notes, we had a 5.8, we had an 8.2 and a 7.3 looking back to February, but 10% was a pretty big increase in mining difficulty. Right now, we are 962 blocks away from the next difficulty adjustment. I'm a numbers guy, and the number 962 means something really special to me. If you know that and you know why, then that should be obvious to you as well. But something I'm not really going to get into right now. Perhaps we'll talk about that at some point in the future. But the 962 blocks until the next mining difficulty adjustment, and that is now looking like it's going to be a decrease. It's also moved back a little bit. Last DCA Wednesday, it was looking like the next difficulty adjustment would be on August 12th. Now it's saying it's going to be August 14th. So, when we're just beginning a difficulty epoch, the numbers, the forecasts are really almost meaningless, because the Bitcoin Core protocol relies on the average of 2016 blocks to determine how fast blocks are coming in over that 2016 block spread. And just like sometimes blocks can come in back to back, sometimes blocks can take an hour or more to come in, but that doesn't necessarily mean we're not right at that 10-minute target on average. So when we only have a handful of blocks to guess by, those guesses can be all over the place, and often they can be wrong. And then also you can have an event like the heat wave in the summertime or the ice storms in the wintertime, where a lot of the Bitcoin mining operations curtail their hash power to sell, that electricity back to the grid, or that's over with and they turn all that hash power back on all at once. And that results in blocks speeding up. So really you don't know until you know, but now that we're only a week away, we're getting a general idea what that should look like. And depending where you get your data, it's going to be a difficulty decrease, and a significant one, anywhere between 2.31% to 4.3%. So giving up some of that 10% that we just had ratcheted up about 2.5 weeks ago. And of course, that really doesn't make much of a difference to the average pleb. The difference between a block coming in at 9 minutes, 10 minutes, or 11 minutes is really kind of irrelevant. It really only makes a difference if you're mining at home, or especially if you're one of those large commercial miners, where a 2 to 4% swing in your profit margin can be quite significant. And the reason we're looking at a difficulty decrease is because blocks are coming in faster than that 10-minute average. Right now, they're coming in at 9 minutes and 49 seconds on average. And so while that is faster than 10 minutes, it's only 11 seconds faster than 10 minutes. And I guess we won't really know because we're only about halfway, and a lot can happen in the next 7 days. But if you're a miner, if you're mining at home, it may get potentially 2 to 4% more profitable for you, depending on what happens in the next few days. And currently, Clark Moody's dashboard is estimating that there are 631.5 exahash of power securing the Bitcoin network. That's actually a pretty big decrease from last week, where they were estimating 651.5 exahashes, so 20 exahashes fewer. Obviously, all of that's just a guess. Nobody knows precisely how many exahash of mining equipment are plugged in. They just take how fast the blocks are coming in on average, and they take into account what the difficulty to mine the next block is, and they extrapolate from there, and they get a pretty good idea of what the network hash rate looks like. But either way, it looks like the hash rate gave up some of the exahash it had picked up last week. Last week, we had seen an increase of 56.5 exahash, and it's given up about half of that, which explains why we're going to give up about half of the difficulty at the next mining difficulty adjustment. Real quick, I want to take a minute to thank those of you listening on your favorite podcasting 2.0 app, such as Fountain. Fountain, for example, allows you to earn Satoshis just for listening to your favorite podcasts. And it also allows you to support your favorite podcast through the value for value model by either streaming sats as you listen on a per minute basis. And that's something that you set. If you feel like listening to this podcast is worth 1 Satoshi per minute, you can set it to stream 1 Satoshi per minute automatically while you're listening. If you think it's worth 10 sats a minute, you can, my point being you choose how much value you think that this podcast is providing you, and you can stream it back on a minute by minute basis. What most people prefer to do, and actually kind of my favorite method as well, is by sending a boost. The boost, of course, is a shout out, but since it is a Lightning transaction, it allows you to contribute value back to the podcast by sending some Satoshis along with that shout out. And we do have one shout out to read. That is from longtime supporter of the podcast, Leggy. Leggy sent 3,000 sats and says, "Yay, cheap sats!" exclamation point with a smiley winky face. And that is exactly right, Leggy. I'm excited for the exact same reason. We're going to stack significantly more Satoshis this week than we did last week. If you're like me, when the price of Bitcoin starts zooming, when we set those new all-time highs, and you start looking out on the long-term horizon, you start thinking about, what is your goal for Bitcoin? Is it just to be part of the Bitcoin economy? But do you have a more long-term goal? Like maybe you want to retire comfortably, or maybe you want to pass an inheritance along to your kids, set up some sort of legacy or some sort of foundation, whatever it is. Everybody has a view of where they're going to be one day. And as you get older, you start thinking about that more often than you do when you're a kid. And when you're a little kid, what you think of in the future is what you're going to do when you grow up. You're going to be an astronaut, a firefighter, whatever. But as you become more of an adult, especially when you have kids and you start thinking about the world that your kids are going to grow up in and what's going to happen to your kids when you're gone, you start thinking about things like leaving a legacy. And when you're thinking about leaving a legacy, you start worrying about the number of Satoshis you have. And did you stack hard enough? Are the number of sats you've been able to stack going to be sufficient to establish the legacy that you're aiming for? Or maybe you don't have kids and you're just thinking about retiring comfortably, paying off your debt, paying off a student loan, paying off your house, whatever your personal goal is for your future and how Bitcoin plays a role into that. If you're like me and you've been stacking for a while, you get kind of a new sort of FOMO, even though we've been stacking for 3 years, more than 3 years, just on this podcast. And we had ample opportunity to stack when Bitcoin was, much cheaper, 20, 30,000, even down into the teens. You start worrying, did I stack hard enough? Could I have stacked more? And now that Bitcoin's getting more expensive, am I going to be able to hit my stacking goal? Well, relax. If you've been stacking every Wednesday alongside of us, you already have stacked more Satoshis than the average person will ever be able to do. Obviously, we want to stack more, but you are already in that quote unquote elite friend club that Adam Meister likes to say when he says, "Hello, my elite friends." He doesn't mean elite as an elitist. He means that you're early. You've stacked more sats than the average person will be able to stack, because even though they're starting to hear about Bitcoin, most people know about Bitcoin now. Not everybody has made it far enough in their Bitcoin journey where it's something that they've paid more than just cursory attention to. Because you're here listening to this podcast, and because hopefully you're stacking alongside us on this podcast, you have a head start. But nonetheless, it is always exciting that we're going to be able to grow our stack by more Satoshis this week than we were last week. And so thank you, Leggy. Thank you for those 3,000 sats. Thank you for the boost. It's always good to hear from you. It's good to know you're still out there. You're still stacking. You're still listening to the podcast. And like you said, yay, cheap sats. Speaking of our listeners, our geographic distribution of listeners has remained relatively ossified again. Our top 10 countries for where our listeners are located remain as follows. Number 1 for most of the history of this podcast has been the United States. Unsurprising, because I'm in the United States. This is a U.S. podcast, an English language podcast. It's not a U.S. podcast. It's a Bitcoin podcast. It's for Bitcoin citizens all over the world. We have a truly international audience, as I'll get into as we go through the statistics. But I'm sitting here in the United States. And so to me, I guess it seems like a no-brainer that I would have the majority of my listeners in the United States. What is flattering, though, is it's only about half of you. Number 2, as usual, remains Argentina. So muchos gracias, amigos, in Argentina. Number 3 remains Germany. So Dankeschön, mein Freund in Deutschland. Number 4 remains Canada. So hello to all of you up north of the United States, where the weather's probably absolutely gorgeous right now. Number 5 remains Luxembourg. So again, Dankeschön, mein Freund in Luxembourg, or Morgen, to those of you speaking Luxembourgish. Number 6 remains Spain. So hola, muchas gracias, amigos in Spain. Number 7 remains Colombia. Again, hola, muchas gracias, amigos in Colombia. I'm getting tongue-tied today. I know I do that a lot, and I think sometimes I have a harder time articulating myself when I'm excited. I feel like this is a great day for stacking. This is going to be a fun podcast to sit down and record, and I'm having fun. There's a big smile on my face. I know this is an audio podcast, but if you could see me sitting right here, staring at this computer screen, thinking about where you're listening to, where you're located while you're listening to this podcast, that thought is making me happy. That's why I do this podcast, because I like to talk about Bitcoin. And I like to share the word with people all over the world. It's super, super flattering that I'm able to do so. But as a result, I think sometimes because the muscles in my face are a little tighter because of that smile, I tend to get tripped up on my own words fairly often. And I tend to speak pretty fast in general compared to a lot of the people I know. And so it's easier for me to get tripped up and tongue-tied when I'm having a good time. Apparently today is no exception. So number 7 remains Colombia. Hola, muchas gracias, amigos in Colombia. Number 8 remains Mexico. Mexico's been in the top 10 for about a month now, and that is really cool. So, hola, muchas gracias, amigos in Mexico. Number 9 remains Australia. Also, they have only been in the top 10 for about a month as well. So, g'day, mates. Thank you for listening from down under. Number 10 remains the United Kingdom. So, thank you to our cousins across the pond listening in the UK. Venezuela is lurking down there at the number 11 position, where they've been since they dropped out of the top 10. They were number 8 for the longest time. It was flattering that we have so many listeners from a place like Venezuela, where Bitcoin can mean a lot more for you right now than it can in places where they've got a more strong currency, a currency that isn't hyperinflating as fast, although that is changing rapidly. And we'll get into that a little bit more when we talk about the news. And of course, there's a lot going on in Venezuela right now. Oh boy, is there a lot going on there. And if you're tied up in all that, our thoughts and prayers are with you. Hopefully things go your way and it can be a brighter future in Venezuela. And we normally only read the top 10 countries. Venezuela is number 11, but hola, muchos gracias, amigos in Venezuela. We stand in support of what you're trying to accomplish down there. A very Bitcoiner worthy goal, but also just a human goal, a freedom goal, a liberty goal. On to the news that everyone is talking about, normies and Bitcoiners alike, is the price of Bitcoin, of course, and the corresponding global market crash. Despite a relief rally yesterday, the global markets continue to correct. In the United States, this got underway when trading kicked off on Monday morning, leading to headlines like Wall Street gets routed. The Dow plunged over 1,000 points, while the NASDAQ and S&P 500 both sank more than 3%, a part of a global stock sell-off. Further headlines: stocks tumble around the world. Dow down 1,033. Don't panic. Magnificent Seven shed 1 trillion. Recession odds climb. Emergency rate cut ? And traders brace for more swings. Of course, Tuesday saw a bit of a relief rally as the price of Bitcoin recovered as well to almost as high as $58,000. But as of today, that relief rally appears to have run out of steam. U.S. stock markets, for example, swung back into losses after starting the day on an optimistic note, and the U.S. dollar price of Bitcoin dropped back down to pretty much to exactly where it is at the time of this recording, giving up the gains from the previous Tuesday when it looked like maybe things were going to recover, leading to headlines such as Yahoo Finance's stock flipped to losses as comeback loses steam, or stocks fade, resuming Wall Street downturn. The NASDAQ led Wednesday's decline as a market rebound lost steam. Of course, this is not a stock market show, but the S&P 500 was down about 1%. The Dow lost about 0.5%, and the NASDAQ lost more than 1%. And even gold gave up about 0.5%. So much for being that uncorrelated asset, Shiffy. Dr. Jeff Ross, who is at Valshire Capital on Twitter or X, tweeted about that this afternoon when he said, "The market tremors will continue until the Federal Reserve capitulates. That is all." Well, according to the mainstream media, all this kicked off in response to reports on Friday that the U.S. job market is weakening, leading to fears that a recession may be imminent. Yahoo Finance reported on Friday the headline, "Jobs Report Stokes Fears Fed May Have Waited Too Long." The article says new signs of a cooling labor market are stoking fears that the Federal Reserve may have waited too long to start lowering interest rates. Data from the Bureau of Labor Statistics released Friday showed the U.S. economy added 114,000 non-farm payroll jobs in July, fewer than the 175,000 expected by economists. The unemployment rate rose to 4.3%, its highest level since October 2021. The new numbers reinforced concerns among some Fed watchers that the central bank should have decided at a meeting this week to lower rates for the first time in 4 years to get ahead of a slowing U.S. economy before it tips into recession. All right. Need I remind you that the U.S. government routinely revises their job numbers down months after the initial release? If they follow this pattern, it would not be out of the question at all for this jobs report to actually come in significantly negative by the time all is said and done. We've seen that before. I forget specifically what the numbers were, but it was like the fourth quarter numbers from a year or two ago that they were saying there were like 344,000 jobs. And then the quarter later, they revised it down to just 125,000 jobs. And then 6 months after the initial numbers came out, it turned out to be actually a negative number, that we'd actually lost jobs. But by then, there's already new numbers that are coming out, and nobody pays attention to the fact that they had lied to you and lied significantly, because there's a big difference between 100 or 350,000 new jobs and actually losing jobs. But we all know, as Mark Twain once said, that there are 3 types of lies: damn lies, and statistics. And of course, I'm assuming he was probably referring to government statistics, especially because those seem to be the worst of the damn lies. The point being, this was far from a U.S.-driven or U.S.-centric downturn. Remember, of course, the Bank of Japan has been taking drastic measures to prop up their yen recently, and it looks like those measures have been in vain as the yen continues to gain strength, which is a bad thing for Japan. And the market rout on Monday morning actually began in the middle of the night here in the United States, with, of course, Asian markets tumbling well before we even woke up here in the United States, well before U.S. markets opened. So this was hardly a U.S.-centric downturn. If it were, it wouldn't have started with the Japanese stock market tanking, for example. The point being, this is much, much larger than just ripples in the U.S. economy because of what the Federal Reserve may have done or may have not done with interest rates. As far as the Fed is concerned, I would not anticipate an emergency meeting or rate cut on just a day or two of down stock market news. The Fed will probably stick its head in the sand and take a wait and see attitude, or a hopium attitude, hoping that the markets sort themselves out and they don't have to take any action. Least of all, any action that for some quote unquote would be interpreted by people as an admission that they waited too long to cut rates, that this really was their fault, and that things are hitting the fan and might trigger panic. So there are reasons, both positive and negative, why the Fed wouldn't necessarily act right away. Again, I don't have a crystal ball on what the Fed is going to do, just like I don't have a crystal ball on what the price of Bitcoin is going to be today or tomorrow or the next day, other than in general it will go up and to the right. All right, but as I said, this is not a financial podcast per se, and of course we don't give financial advice. This is a freedom podcast. Bitcoin was created in part in response to the 2008 global financial crisis. Remember, Satoshi embedded the headline from the Times of London in the Genesis block that the chancellor on brink of second bailout for banks and the fiat foolery that caused the great financial crisis. And of course, this week is just a reminder to the normies and that the financial elitists, the Davos elite, the WEF cucks, they haven't changed their game at all since 2008. They're playing the same games. They're doing the same sort of things. They might be using slightly different words to describe, the chicanery they're up to. But that's what it is. They're up to their usual chicanery. And as usual, Bitcoin is that escape hatch from this chicanery. Until Bitcoin is more mainstream, the path to hyper-Bitcoinization will continue to be bumpy. But again, when you zoom out, Bitcoin continues up and to the right. This leads us to the question, is Bitcoin on sale? Bitcoin is currently down significantly from where we had been, above 70,000, almost 74,000 at one point. But I want to remind you that we are still above where we would have been at this point in a quote unquote normal halving cycle. Remember, I've said to you on multiple times in episodes leading up to this year's halving that if this had been a quote unquote typical cycle, that is, if history had rhymed or repeated, we would have crossed the halving at about 3x the cycle low, which would have been about 45 to 48,000. As is often the case after the halving, there probably would have been a slight dip after the halving. I mean, there was, but it would have been a dip from like 45 and 48 to even lower. And then, of course, there would have been a gentle slope upwards beginning sometime in the summer, maybe by now, maybe just getting underway. And then we would expect to eclipse the previous cycle all-time high about 6 months to a year after the halving, sometime this fall or winter, for example, maybe around Thanksgiving or Christmas. And that's when we would be talking about a new all-time high. Instead, that didn't happen. We got a bump, a huge bump, a heck of a bump in the run-up to the much anticipated spot Bitcoin ETFs that allowed us to set a new all-time high before we even had the halving. So I would posit that if it weren't for the ETF euphoria, Bitcoin would be pretty much exactly where it is today, if not even slightly lower than we are today. So while this may seem like Bitcoin has crashed, and it has gone down, in response to the fear, the FUD, the normie hysteria, the sell what you can, not what you want to reaction that when markets crash, people, for example, we knew the market was going to crash Monday morning, hours and hours and hours before it opened. We had seen it happen in Japan, and it was pretty much a done deal that it was going to happen here. And you couldn't sell your stock to get out. But what people could do is start dumping their Bitcoin, because Bitcoin doesn't close. It trades all the time. Of course, history doesn't always rhyme. We have black swans like we did in 2020 with the virus and the lockdowns. And we have white swans or golden swans like we got with the ETF pump. Again, nobody has that crystal ball, which is why I say that time in the markets beats timing the markets every time it's tried. And what I am 100% confident in, though, is that in the long term, Bitcoin does go up into the right. Forever, Laura, forever, as Michael Saylor said. Or in the words of Adam Meister, as he likes to remind us, Bitcoin always returns to its all-time high. Just zoom out. There has been a lot of fun posts on Twitter, not just all panic and doom and gloom, or people saying, buy the dip. Lena Sichet, for example, posted a couple of little hodler cartoons about the price dip, one of which was comparing the dip to the one in 2020, where the price corrected 50% in 2 days, and another mocking that whole mantra, what is this, a dip for ants, with it showing the ant peeking over the edge of the dip, but then you zoom out a tiny bit and the ant is like Godzilla size. Others have reposted various classic memes illustrating the difference between what people think it's like to hodl and what it's really like to hodl, with the meme of the meme of the person just smoothly sailing up the slope corresponded to what it's really like with the meme, and then a trench that they fall off of and another trench. So, it's a lot of fun. If you just zoom out and if you just keep stacking sats, you're in good shape. Of course, the carnage amongst the scam coins has been truly epic. Well, this is a chance to pick up Bitcoin for less than the 2020 cycle all-time high, or the first one before we set the current all-time high, that is, after the ETF hype, just prior to the halving. The S coins got absolutely hammered. When Bitcoin was down 10% on Monday, for example, ETH was down more than 20%. And while Bitcoin is up 88% in the year, ETH is only up 28% for the year. And it's off more than 50% from its all-time high, which remains that high it set back in 2021 on the coattails of Bitcoin's 2021 post-halving bull run, obviously, having never even gotten a bump from the launch of their spot Bitcoin ETFs. So altcoins, even Ethereum, continued to trend to zero in Bitcoin terms. And if you didn't dump your altcoin bags, if you're one of those people that before you really dove into your rabbit hole journey, that you got interested in Bitcoin, and then people convinced you that, oh, well, these other coins are going to be even better because you're too late to getting a Bitcoin. But if you get into this new coin, you can get the gains that you missed out on. If you got into that and you did not dump your bags and convert them into Bitcoin, you are really, really starting to hurt now. So you do you, but hopefully you're not holding a stack of ETH or any of the altcoins. Speaking of the ETFs, there have been outflows this week for sure, but the biggest ETF of them all, BlackRock, their ETF had zero flows today. So while they probably had some outflows or maybe some small inflows, it was within the margin of error. It's not called the margin of error, but basically they buy Bitcoin in blocks. And so they have to have a certain amount of buying or a certain amount of selling before they will get to the next block and either buy or sell Bitcoin. And the inflows or outflows that they had today were insignificant enough that they had officially a zero flow day. The takeaway, though, is that the normies are not panic selling their Bitcoin. The people that are holding the ETFs are not dumping their Bitcoin ETFs en masse. At least they're not dumping the BlackRock ETF. And BlackRock remains one of the biggest holders of Bitcoin, holding more than $20 billion of the Bitcoin. Of course, I don't recommend buying the ETFs. I don't make financial advice, but I wouldn't own the ETFs unless I had no choice. Maybe if you have a retirement plan, a pension through your employer, where you have money taken out of your paycheck and they match it and you don't really have any say, you can't buy Bitcoin with it, but you can put it into different funds. Then, of course, maybe you might be interested in buying the ETFs. But the point being that while there's panic in the streets on the stock market, there isn't that same level of panic with the Bitcoin ETFs. That is something new, and it's maybe a harbinger of things to come. It's the sort of thing you'll expect to see on the path to hyper-Bitcoinization, where if you want to see the price of Bitcoin smooth out and become less volatile, that means that fewer people will FOMO in, and so we won't necessarily get as high of a pump, but also fewer people will sell. There will be less fear selling, less panic selling as well. And that maybe that's beginning to happen. Maybe we're beginning to see Bitcoin become more of a quote unquote mature asset. Speaking of whales, Michael Saylor, one of the largest Bitcoin whales, discussed his personal holdings recently. We all know Michael Saylor for his company MicroStrategy, where he has converted billions of dollars into Bitcoin for his corporate treasury. But his personal holdings have been a little more private. Obviously, individuals and private companies, they don't have to disclose their assets in the way that publicly traded companies like MicroStrategy do, so we don't get like a quarterly reporting window into how much Bitcoin Michael Saylor holds, just how much his company holds. But according to Bitcoin Magazine this afternoon, Michael Saylor announces he owns $1 billion in Bitcoin personally. I'm not sure this is really news, but apparently he's making it official, at least according to Bitcoin Magazine. All right, back to Clown World for a moment. BitMEX Research is calling out fake Toshi in his response, or apparent lack thereof, to his humiliating defeat in the COPA trial last month, where he was ruled that he's basically officially a fraud now. He's not Satoshi. He didn't have anything to do with the white paper. And at one point in time, fake Toshi said he was going to appeal that ruling. And so BitMEX Research on Twitter, at BitMEX Research, has called Craig out on that. He says, has Craig Wright appealed, ? Or was he lying about his appeal, ? Quote, the UK's judicial office has since confirmed to Protos that Wright hasn't submitted an appeal. And then he has a screenshot that from CSW saying the application to appeal has been filed. So apparently, amongst everything else that we know CSW has lied about, apparently he's lied about his appeal to the COPA ruling as well. So is this chapter finally over? I find it hard to believe, darn near impossible to believe, a sociopath, a narcissist on the level of fake Toshi would ever go away. It seems a little bit incredulous, but it does appear that he, or at least his financial supporters anyway, the people that have enabled him, have given up on his lawfare against the Bitcoin community, at least for now. And apparently Craig and his supporters have crawled back under their little rocks to hide and are licking their wounds. And that would be good. I have no doubt in my mind that after the 6 months or however long Craig has to officially post on Twitter and his website that he lost, he's officially not Satoshi, and that he's a fraud. He's been found to be a fraud in a court of law. That once that's over, we'll probably see him weasel back into the media every chance he gets with claims here and there. But the big deal is he won't be able to sue people like Hodlanot anymore for calling him out. He won't be able to target devs anymore. He won't be able to order websites take copies of the white paper down. Like, in Britain prior to the COPA ruling, you weren't able to get a copy of the white paper off of certain websites by court order because he was trying to patent the white paper and trying to sue anybody that said he wasn't Satoshi. And so COPA was a huge victory with him being officially declared a fraud, pretty much putting an end to all of the current legal lawfare that Craig Wright had been conducting, hopefully forever, even if he, as a weasel, still continues to try and pop his head up and say, look at me, look at me, look at me, look at me, at some point in the future. At least he won't be suing devs or plebs. All right, on to the reason we are here, and that is because today is DCA Wednesday. And if you are just joining us for the first time and you don't know what DCA is, well, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 159th stack. We've been stacking every Wednesday for more than 3 years now. We started all the way back on Wednesday, July 28th, 2021. So just a little over 3 years, but more than 3 years nonetheless, beginning our 4th year of weekly DCA, but I'm getting a little bit ahead of myself. So our equal portion, I chose $20 because I wanted to choose an amount that almost anybody listening to this podcast should be able to come up with, at least on a weekly basis. Again, this is a you do you thing. Maybe $20 is too much and you can only afford to invest 5 or 10 or even $1 worth of your hard-earned income into Bitcoin. But again, I chose $20 because I thought that most of you could probably come up with $20 a week. Some of you obviously are probably stacking a lot more. Again, those are all you do you things. Our regular interval, I chose weekly because, I'm doing a podcast about this, and I'm not going to do a podcast daily about our DCA. And there are people out there that DCA daily. There's people that DCA hourly, believe it or not. The important thing is, though, that you're consistent, that you pick a target interval, in our case, weekly on Wednesdays, and you pick a consistent amount and you just invest that amount of money, convert that amount of money into Bitcoin every time your interval rolls around, whether it's daily, weekly, or monthly, regardless of what the Bitcoin price is. And as we discussed last week on our 3-year anniversary, you are significantly better off today if you had started just DCAing every Wednesday alongside us than you would be if you had YOLO'd in and bought your entire lump sum on that very first Wednesday on July 28th, 2021. And there's a lot of reasons for that. And of course, obviously, as time goes on, if you invest $20 a week and you do so for 20 years, and then you say, well, if I'd just taken everything I invested over 20 years and dropped it into Bitcoin 20 years ago, I'd be better off. And yeah, probably that point you would have, because Bitcoin would have increased so much. But the point being, if you had that kind of money to drop in all at once, you would be DCAing more than just $20 a week. So, again, this is a you do you thing. It's just something that I think is useful. I find it fun to talk about, and hopefully you find it entertaining, if not useful as well. So back to our DCA stack. So far, we've stacked 158 Wednesdays, and we've converted a total of $3,160 into Satoshis, including about $75 worth of fees and a little bit of a spread that Cash App charges. And that has earned us a stack of 9,672,884 Satoshis, so almost 9.7 million sats. And we've purchased them now at an average cost of $32,668.64. So even with the price of Bitcoin, quote unquote, down significantly this Wednesday, we're still up significantly compared to that average cost of $32,668.64. And of course, as time marches on and Bitcoin marches up and to the right, that's going to become even more so the case. So today we're going to grow that stack. As usual, we're going to grow that stack using the handy dandy Cash App. Cash App is not a sponsor of this show. I just use Cash App because I find it's the easiest, potentially the cheapest way to stack small amounts of Bitcoin. Cash App charges a slightly larger fee. In fact, they charge about 2.25%, which is significantly more than some exchanges do. But we're only going to buy $20 of the Bitcoin, which means we're only going to pay about 45 cents in fees to do so. One thing that Cash App will let you do that other exchanges will not let you do is transfer that Bitcoin to your hardware wallet for free. If you have a little bit of time to wait, which you should if you're just moving it to your hardware wallet, they'll let you do so for free. If you are uncomfortable waiting up to a day for that transaction to confirm, you can pay to have that Bitcoin transferred, and then it's going to cost you some US dollar to do so. But I have never paid to have Bitcoin transferred from Cash App. I've always done it for free. Usually your UTXO will show up in the mempool relatively quickly. It had been confirming in the next block or two. As things have gotten busier within the last month or so, it's taken about a day for the UTXO to get mined and confirmed. But I can see the UTXO out there in the mempool hit almost immediately. And so, if you're worried that maybe you did something wrong, that they're going to steal your money, or that, you entered the wrong address and your Bitcoin's going to be lost forever, when you see it pop up in your wallet as an unconfirmed transaction, at least you know that that's not going to happen, that eventually, that block will be mined. And for me, that's enough, because if I'm sending it to my hardware wallet, I don't care if it confirms right away or if it confirms tomorrow, as long as I know it's going to get there, and it's going to get there for free. So that mining fee, especially in times of slightly higher fees, for example, right now we said what it cost you 60 something cents to be in the next block. on average. So that's more than the 45 cents they're going to charge us in fees. Of course, I'm not going to transfer just 30,000 sats to my hardware wallet. I save up till I have more Satoshis, maybe 500,000 or 1,000,000 sats. Again, a you do you thing. As we've spoken about in the past, we've talked about consolidating their smaller UTXOs to avoid them becoming unspendable dust. As fees go up, you don't get to the point where the mining fee costs more than the sats you have in the UTXO. So that's something that you need to decide for yourself as well. But I usually wait till I have between 500,000 and 1,000,000 Satoshis before I transfer it to my hardware wallet, which again kind of negates that mining fee a little bit, I guess. But for the time being, I'm going to continue using Cash App. Again, they're not a sponsor of the podcast. They might not even be available where you're at. But if they are available and you want to use Cash App to stack sats, we do have a referral code in the show notes where you'll get $5 free just for signing up and using Cash App. And the podcast will get a little something as well. And that will allow you to help support the podcast and not only do so without costing you any of your Satoshis, it'll allow you to actually get paid for helping to support the podcast. So that's pretty cool. So consider using that or any of the other referral codes we have in our show notes. If there's a service you're interested in using, even if you don't use our referral code, use somebody's referral code, because every user of these services has their own referral code, their own affiliate link, not just podcasters, not just people who have those services as sponsors. And if you don't use the referral codes when you're signing up, be it mine or a friend of yours, you're losing out. You might as well get that $5 free and convert it into Satoshis. But I digress. I already have $20 in my Cash App because I went to the movies and I transferred more money to Cash App than I needed. For some reason, it was about half the price I thought it was going to be to go to the movies. Went and saw Twisters the other night. That's a pretty good movie. I'm not generally a fan of the whole, almost every movie that comes out seems like it's a remake or a reboot of some, popular movie from the 80s or the 90s. But Twisters was a good movie. It was, similar to the first one in many ways, in that they're chasing tornadoes down and they narrowly escape death on multiple occasions, etc. But it was a good movie. It was certainly entertaining. Anyway, the long story short is I already have $20 in my Cash App. So it's just a matter of me tapping Bitcoin, tapping buy, entering $20, tapping confirm. And boom, just like that, we've purchased another 34,993 sats. Bitcoin has gained almost $1,000 in value while I've been yapping. Boy, I should have just purchased at the beginning of this podcast. We'd have bought even more sats. We purchased at a price of $55,869. When we first started this podcast, Bitcoin was only $54,920, so almost $1,000. Bitcoin's pumped almost $1,000 while I've been talking about the news. But still, this is about the cheapest we bought Bitcoin in months. This is the cheapest stack we've made since all the way back on February 21st, stack 135, when we stacked for just $51,659. And that's cool because 2 weekends ago, last DCA Wednesday, we only stacked 30,000 sats. 2 DCA Wednesdays, we only stacked 29,000 sats. But today we stacked almost 35,000 sats, 34,993 sats. So it is always a good day when you can stack more sats than you did the week before for the same amount of fiat. And that stack raises our total stack to 9,707,877 sats, now officially more than 9.7 million sats. And I kind of have an unofficial goal for this DCA Wednesday series to stack a cool 10 million sats, 0.1 Bitcoin, a tenth of a Bitcoin. And I've had multiple goals. When I first started stacking just $20 a week, I thought that, if we get a couple 100,000 sats, that'd be cool. And that would put us above that 225,000 or 250,000 sats that they say the average pleb will be able to stack one day during hyper Bitcoinization. We're certainly well above that. So I've adjusted that, first adjusted it to 1 million sats, then maybe 5 million sats. And you're going to do the same thing on your Bitcoin journey, depending on how much Bitcoin you have. You start out thinking, hey, if I can only get 1 million sats, or if I can only get a half a Bitcoin, or if I can only stack 1 Bitcoin, or if I can only stack a second Bitcoin, you never really are done stacking, and you hopefully meet your goal, and then you set a new goal and move forward. So currently my podcast's goal is 10 million sats. And for a while, when Bitcoin was rallying towards $80,000 and it was looking like we were going to be over 100,000 US dollars per Bitcoin before you knew it, it looked like we were never going to get to 10 million sats, because the fewer sats you're getting for that $20, the harder it is to get there. So by stacking almost 35,000 sats today, man, that means we're going to stack. If I know Bitcoin will probably go back up, and I'm almost jinxing myself talking about it, but let's say Bitcoin just goes sideways for another month, and just a month, and just basically 3 weeks of DCA Wednesdays, just 3 episodes, we could stack 100,000 sats, and that puts us at 9.8 million. And we only need to do that 2 more times, because 3 weeks after that, we'd be at 9.9 million. 3 weeks after that would be, 10 million. So if Bitcoin stays right where it's at, we could reach that goal in just a couple of months, certainly by the end of the year. Whether we do so by the end of 2024 or not is probably highly dubious, because most likely the price of Bitcoin will recover. It usually recovers before everything else does. So before you expect to see the markets rebound, you'd expect to see the US dollar price of Bitcoin rebound, like it did after the 2020 lockdown crash. Bitcoin recovered a month or so before the stock markets did. And there's extra incentive for it to do it on a halving year, just like 2020 was a halving year. This is a halving year. So if Bitcoin blasts past 100,000 or 200,000 or wherever it ends up in this halving cycle, that means we'll get fewer and fewer sats for that $20 every Wednesday. But one thing's for sure, we're going to keep plugging along. We're going to keep stacking Satoshis as long as there's someone out there foolish enough to take my paper US money and exchange it for the hardest currency that man has ever discovered. And just to put this in a little bit of perspective, when Bitcoin hits $100,000, if we don't stack another Satoshi between now and then, that stack of Bitcoin will be worth $9,707.87. A hell of a return for, just the $20 a week that we've converted into Bitcoin, just the $3,180 that we've stacked over the last three starting our 4th year of stacking just every DCA Wednesday now. If Bitcoin hits $1 million, and maybe there are those who say that it'll do it this cycle, I'm torn on that. It would be really cool to see Bitcoin hit a $1 million US, providing that doesn't mean that it costs $1 million to buy a loaf of bread. But $1 million US in current US dollar terms, that'd be kind of exciting. But it would also be depressing, because it would mean we'd be getting just 1 sat per penny that we convert. So we'd only be getting 100 Satoshis per dollar. So $10 would be 1,000 Satoshis, $20 would only be 2,000 Satoshis, as opposed to the 30-something thousand Satoshis we just stacked. So that from that standpoint, it'd be a little depressing. It would certainly make it a lot harder to hit that 10 million sat goal anytime soon. And of course, if Bitcoin hits Fidelity's pie in the sky goal of $1 billion, which it probably will do one day, whether or not we're alive to see it, it's not inconceivable that it would hit $1 billion if all the countries, all the significant players in the world, all the significant companies, all the significant countries were using Bitcoin as their strategic reserve asset. Either way, if it hit that $1 billion mark, even if we don't add another single Satoshi to the stack, the current stack would have a US dollar value of $97 million, $78,077. That puts it in the ballpark of the really, really early adopters, the people that were mining Bitcoin on their laptops, the people that have 100,000 Bitcoin, the people that you used to read the stories about in Forbes that would say, if you'd invested just $1,000 in Bitcoin 10 years ago, you'd have $200 billion, or whatever the headline said by now. So as inconceivable as that number seems, it's happened before. And if Bitcoin does what I believe it's going to do, I guess it's extremely possible that it will happen, at least in some of our lifetimes, depending on how old you are. I mean, there's people out there who are already retired that are stacking Bitcoin, like UK Bitcoin Master, and there's kids out there that have to have their parents open up an account for them so they can stack sats, or they can only stack actual US dollars at Bitcoin meetups because they're too young to open a Bitcoin account. And for them, the chances of them seeing $1 billion Bitcoin probably are an absolute certainty. And that's just amazing to think about how that change in the quote unquote wealthy, who the global elite are, who the financially privileged are. If you're a Zoomer, if you're a teenager, if you're in high school and you have the ability to one day be a multimillionaire, a 100-millionaire, a billionaire, just for scratching together $20 a week, that's just amazing, because there are very few other things in this world that would have allowed you to do that. I mean, that's definitely not just a once in a lifetime, but a once in a millennia style event. All right, before I go, I want to reach out to you and ask you to help support the podcast. And the fastest way you can do so is you can help feed that algorithm monster. For example, it really helps if you rate or review this podcast. Depending on where you're listening, there are different ways to do so, but if you could leave this podcast a 5-star rating, that would be absolutely amazing. Any rating whatsoever is engagement, and that helps boost this podcast in the rankings to where people are more likely to see this podcast when they're surfing or searching for new podcasts to listen to. Along those lines, please give us a follow on Twitter or X. And on Twitter, we are at BTC Bulletin Pod, at BTC like Bitcoin, Bulletin Pod like podcast. Of course, the more people we have following us on Twitter, the more people are likely to see posts about DCA and DCA Wednesday. And maybe we'll help orange pill some people. Maybe you will help orange pill somebody simply by helping boost us in the algorithm, in the ratings, as far as the algorithms are concerned. Of course, you can help support this podcast on the value for value model by listening on value for value apps such as Fountain or Breeze, on by either streaming sats based on how much value you feel this podcast is providing, or sending us that boost, that shout out, letting us know what you think about the podcast, what you like about the podcast, or what you don't like about the podcast. Of course, besides just promoting the podcast in the rankings, I also love to hear from you. I love to know who you are and where you're at. So please reach out to me just to say hi, if nothing else. You can let me know what you think about this podcast, or just say a simple hello. And of course, you can do so by DMing me on Twitter, again, at BTC Bulletin Pod, or you can send me a good old-fashioned email, and the email address is bitcoinbulletin@protonmail.com. That's bitcoinbulletin@protonmail.com. Of course, more and more people are starting to use Proton Mail now that they're getting ready to debut their Proton wallet. That is kind of cool. Proton is a privacy-centric, privacy-focused service. That's why I use their mail, their encrypted email. I use their free version of email, which makes it even better. Certainly a lot better than using Gmail. So happy that more people are starting to use Proton Mail if it's just because of their wallet. But I digress. Make sure you follow us on Twitter at BTC Bulletin Pod. Send me a DM. Let me know what you think. And if you're not a Twitter user, email me at bitcoinbulletin@protonmail.com, because I really like hearing from you. I like your input. As I mentioned earlier, I do this podcast because I love talking about Bitcoin, but I also like talking about Bitcoin to people, to individuals like you, and I am. But right now, I'm talking to a microphone in front of a computer monitor and a laptop and a soundboard in a studio somewhere in gorgeous, sunny, not right now, not today, Florida. Still gorgeous, just not sunny. And by reaching out and saying hi, it helps put a name to that. And that helps support the podcast on an emotional level. We're not talking financial. We're not talking feeding the algorithm monster. We're talking about endorphins, making it worth my time emotionally to do this podcast. And it always is. I love doing this podcast, but it's particularly humbling and particularly ingratiating to know where you are, to know who you are. You can be a NIM, but to be able to put a NIM, at least a NIM with the numbers. And to know that we've got listeners all over the world is just really humbling and really flattering. Either way, though, don't forget to join us next Wednesday and every Wednesday while we continue to grow that stack together, while we march to that 10 million sat goal and hopefully beyond one day. But either way, don't forget to keep on stacking those sats, you sexy sat stackers.